What is valuation and why is it important? Valuation is the process of determining a company's worth by estimating its future cash flows and discounting them back to the present. There are many different methods for performing a valuation, but all of them rely on the same basic principle. The company is worth the sum of all its future cash flows, discounted back to the present. Why is valuation important? Because it allows you to make informed investment decisions. By understanding a company's true value, you can avoid overpaying for stock and increase your chances of achieving long-term success as an investor. Different types of valuation methods. There are several different ways to value a business. The most common methods are the asset-based approach, the market-based approach, and the income-based approach. The asset-based approach values a business based on the total value of its assets. This includes both physical assets such as property and equipment and intangible assets such as patents and trademarks. The market-based approach values a business based on what similar businesses have sold for in the past. This approach is often used when valuing publicly traded companies. The income-based approach values a business based on its current and future earnings potential. This method is often used when valuing privately held companies. No single method is perfect, and each has its own advantages and disadvantages. The best way to value a business is to use a combination of methods to get the most accurate picture possible. How to choose the right type of valuation for your business. As a business owner, you may need to get your business valued for a variety of reasons. Whether you're looking to sell your business, raise capital, or simply want to understand its worth, it's important to choose the right type of valuation. The three most common types of valuations are asset-based, market-based, and earnings-based. The right type of valuation for your business will depend on several factors, including the purpose of the valuation and the type of business you operate. Asset-based valuations focus on the value of a company's assets, such as inventory, buildings, and equipment. This type of valuation is often used for businesses with large amounts of physical assets, such as manufacturing companies. Market-based valuations compare your company to similar businesses that have been sold recently. This type of valuation is often used when businesses are being sold or when investors are trying to assess the riskiness of an investment. Earnings-based valuations focus on a company's future earnings potential. This type of valuation is often used when businesses are raising capital from investors or banks. The right type of valuation for your business will depend on your specific circumstances. Choose wisely to ensure that you get the most accurate picture of your business's worth. Factors that influence the value of a business. The value of a business is determined by many factors, including the current market conditions, the profitability of the company, the industry in which it operates, and the company's growth potential. While some of these factors are out of the control of business owners, there are still a few things that can be done to increase the value of a company. One way to do this is to focus on increasing profits. This can be done by reducing expenses, increasing sales, or both. Another way to increase the value of a business is to invest in growth opportunities. This might include expanding into new markets or developing new products or services. By taking steps to improve the financial health and growth potential of their businesses, owners can give themselves a better chance of achieving a high valuation. The importance of having a professionally prepared valuation report. A valuation report is a document that outlines the value of a property. The report is prepared by a professional appraiser and takes into account a variety of factors, including the property's location, condition, and recent sales prices of similar properties. A valuation report can be useful for a number of purposes, such as setting the asking price for a piece of real estate or determining the amount of insurance coverage that is needed. In addition, a valuation report can provide valuable information for negotiating loans and leases. Whether you're buying or selling property, it is always advisable to obtain a professionally prepared valuation report. Subscribe to my channel for more tips on business valuation.